Loans basically have covenants that say you have to keep your loan to value the same when you refinance and at all times. So at least that. So if you had a 70% LTV loan, you had 30% equity. Well, if now your equity is zero because the value of the loan is the same as the debt, they're going to either say, sorry, you're in default, give us back the keys. And then the lender's going to try to sell it, make a profit somehow. Or they're going to say, maybe we'll extend that loan for you 1 year, but the banking regulations don't allow these banks to just ignore their loan covenants. And if they've been sold as a mortgage-backed security, they can't change their loan covenants. So the lender's in a pickle because the lender doesn't want to write off that loan because it could make their assets fall and banks fail because they're illiquid. But the investor really can't sell it and they can't refinance it. And so a lot of lenders did, and the federal government, this didn't get very much news, but allowed the banks to wipe out their reserve requirements and to make some extensions. They put out a press release, the Treasury, to try to work with your commercial real estate loans so that we don't have the fallout. And so that's been kind of pushed under the rug, but a lot of banks did extend for 1 year loans. So they're up for renewal. They said, we're just going to ignore the fact that they're worth 30% less. As long as you keep paying, we'll let you keep that mortgage for 1 more year. Or they made them cash in refi. You give us a check for $5 million and we'll refinance your loan at a lower principal. But the problem is that's coming up.